So, hello. How's everybody doing? Good to see everybody here. Let's see. Let's see what gives. As usual, again, we try and do these once a month. I think we've done 12 this year, so I think I've kept my word. Trying to do these once every month. Let's see. Let's see what gives. So again, happy to see everybody here, and just hit me up if you have any questions. Just post it. Don't be shy. More than happy to tackle anything. Again, if you're looking at a specific trade you want me to review, you want to discuss, you're trailing your stop or something like that, or if there's any chart you're wondering what the hell's going on, more than happy to review it. What I'm going to do is I'm going to first talk through a little bit of an overview of where I think we are, and then we'll just follow up with taking all the questions, any questions, and I'm more than happy to stay on as long as there are questions, okay? So let me start recording this. So again, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. No trade calls, no recommendations, or response with our own stuff. We're here for educational purpose only. Going through some charts. As I said before, we're going to start with my outlook, and then I'll take any questions, and we can go on for as long as we need to. So basically, here we're in holiday grind, right? Holiday chop. As always in trading, it's really important to have realistic expectations across the board, not only for your own performance, but realistic expectations every time you come into a specific day, a specific news event for what is most likely to happen, right? And here we're still in this low liquidity grind higher. We discussed there's poor breadth across the board. We're now at 8 days in a row where the S&P has had more declining than advancing stocks, and every single day this month. So it is what it is. Does this mean that in this condition markets can be pushed around left, right, and center? Sure. Does it mean that this has to reverse and crumble? No. Does it mean that it has to shoot up? Not necessarily, but it does mean that if you're stubborn, it could be irrational long enough to flush you, right? So we just have to be a little bit patient, but it does suggest that some kind of a short-term top is being formed and the market is a little bit frothy. Now, keep in mind, low liquidity chop always is better for the bulls. Like in general, markets have an upside bias, upside drift. So especially when that is coupled with low liquidity, all those buy flows are going to have a much easier time at lifting things, right? So that's just the way it is. That's just the context we are. Also, we're in this seasonal pattern, which tends to be very, very bullish. We're going into December. OPEX quad witching tends to be, one of the most bullish weeks of the year, then follows by one of the most highest volume weeks of the year, followed by one of the lowest volume weeks of the year. But here, volumes been pretty much non-existent. In the past weeks, we've been struggling a lot of days to do 1 million ES contracts in RTH session. So it's a little bit funky. Now, so looking at some of these charts, again, don't read too much into the action. It's very easy for stuff to be a little bit out of whack. Now, ES, we're moving. This was our actual final target for the year, which was basically 61. 118. So we're kind of there. I mean, can we flush higher in this low liquidity conditions really rip? Yes. Would it be surprising to see this do something like another 4 or 5% into 6,400 into the year end? Anything could happen, but our base case assumption is that we should kind of stall around here, and if anything, we get a little bit of a corrective action. Again, if it wasn't the end of the year, you'd be a lot more sanguine or looking for some kind of correction, but here you just have to be careful. The way I would look at it, and I've been discussing this a lot with some of the guys in the daily webinars, basically a lot of people are running longs. And the point is, in this kind of market, you just don't know how high the market can go. So the best way instead, in my opinion, instead of having an upside target, if you're running longs, is just to trail your stop and let it go as stupid as it wants. So, even locking in some kind of an arbitrary target every day, even if you're trying to lock in just 5 handles every day, it's a market where you'd prefer for them to come back and take you out than for you to take yourself out with having a T TP in the system. But bigger picture, again, you could see in this low liquidity chop, the fight's going to be around this 10-day moving average. And the way you want to look at it is, as long as we continue to hold above that 10-day moving average, market is going to be tempted to, since it's in spitting distance from these highs, to flush those highs. And usually, all-time highs, new all-time highs are bullish, new all-time lows are bearish. There's a chance for this grind higher to continue. Now we have the ECB today, we got a Fed meeting, so we'll have to see what gives. But the way I'd be looking at it, without overcomplicating it, as long as we can hold in this kind of tight range, it's amber, nothing to write home about. If we break above those all-time highs, then the road is possible squeeze all the way back into 6,400. And on a hold below the 10-day moving average and no stick save, then my base case assumption is that we could get a very quick flush all the way back into this previous all-time high and into the 50-day, right? And that's what's happening on the YM. You see, don't make it too hard. It's not holding the 10-day, no traction, can't get stick saved. This is the area equivalent to the ES, which we said was amber, bullish above, bearish below. We break below, close below confluence of the 10-day moving average. And what's happening? It's unwinding back into the 50. And then you can use the 50 as the next pivotal level. RTY, similar kind of action is in play. Unless it can regain any rally that gets sold into the 10 DMA, you'd expect this to come back into the 50, even though this end of the year tends to be bullish for Russell. If it starts to grind higher, you really don't want to fade this, but use that 10-day as a guide. And here we've got the NASDAQ that was struggling. We're all talking about this rotation out of NASDAQ into YM Russell, but here we've had these headlines and this thin liquidity stuff's just getting jacked. So as I was discussing with some other guys, if you've got Tesla and Google up 5-6% every day, there's no way NASDAQ's going to puke, right? So we've gone away from the AI. That's all boring. All those AI headlines are boring now. Are we moving into the quantum computing headlines? That could be the theme for the whole of next year. So brace yourself. But right here, what you have to understand is still the market is breadth is poor. It's rallying on poor structure. It's rallying in a suboptimal pre-holiday period. So can the rug get pulled on any day? Sure. Do we know what it's going to be? Is it going to come out of the blue? Sure. But as long as you come into the day and you see some of those big FANG components up 5 and 6, it's extremely unlikely that those are going to reverse and turn negative, and NASDAQ's going to trade heavy. Now, what was interesting is, we were discussing in the daily webinars, the difference between yesterday and Tuesday, right? So what was the difference? Yesterday, we came into the open and you got all those big FANG names were getting pumped, but XLK was up 1.5%, 1.2, 1.3%. So we said, this is really, really strong. You got to go with the flow if you're doing anything on this tech. However, the difference on Tuesday, which was much more interesting for fades, is that you had that Google pump and a little bit of a Tesla pump, but XLK through the open was trading down 0.2, down 0.3, and it's a very different dynamic. But especially in this market, because of the low breadth, is that if ever you see one of the index and then you see the breadth in that index coming in, then you really don't want to fade or you're going to get in trouble. But right here, it's the same thing as we looked at these other ones. This was that sideways amber zone above. This is bullish for grind higher. Below, then you're looking for that unwind into that 50-day. Now, RSP has been very, very nice, extremely technical action. I'll be talking about this on Twitter, on Substack too. And what you saw is this very nice failure back at the top end of the channel. And what we said, once we broke below the 10-day, this is a very nice pattern. High odds you'd expect it to come back and tag the 50-day. And that's exactly, what it's trying to do. You can also look at very similar action on the weekly, these kind of failures engulfing with a gap open, positive close, then engulfing high odds, it comes back into the 10-week moving average. So it's kind of a market where you don't want to read too much into the cross-asset correlations. You just want to trade one chart at a time and let it do what it needs to do. Now, today into the ECB and etc., of course, it's going to be interesting to see what the dollar is doing, right? This is a key range. Now, for those who haven't been in these live sessions before, but we've talked about this for a long time, basically the dollar is stuck in this broader trading range, which we call 100, 103, 106. And what's happening here is we've had the first catalyst for this to break higher. And our base case assumption is as long as it can hold above the 106, it's attempting what we call a range break. So the current range, this was mid high range, and this was the low end of the range. And what's happening here with this hold above is that it's attempting a range shift. What does that mean? That we take the new high of the range, 109, mid 106, and low 103. And this is the dynamic you want to look into ECB, into the FOMC. Now, in terms of stepping back a little bit more, in terms of bigger picture, the base case we have to run with, we don't know if it's going to play out like that, but just for kind of shits and giggles, just to shoot the breeze, we have to go with the 2016 kind of playbook, right? Where you had Trump got elected and we saw this rally all the way close into the inauguration, and then once he started doing what it needed to do, then we saw that dollar coming all the way back down. Now the big question is that going to play out again? And that's going to have knockdown consequences for all FX, for commodities, etc. But what we would be looking at is still here. We're looking for this to try and continue higher, and then put in some kind of a top that will likely be shortable for this to try and move back down. Now, if it plays out like that, it would be very textbook, and it almost seems a little bit too good to be true. So I'd be a little bit careful, but that's in the back of my mind what I'm going with. As usual, this view can change in the next millisecond. A strong conviction's weakly held, but we're just having some things in the back of our mind for next year. Then, of course, we just want to trade tactically and focus on each chart independently. And that also means that, clearly speaking about the dollar, it's going to be interesting to see what happens on the bonds, right? As every time we try to get a rally, the bond bulls get whacked. And what I'd be watching, you see TLT, we're back into this pivotal level. I'm not going to discuss this all again because we've done this as previous live sessions, but you can see we're back at those pivotal levels also on, UBs, ZBs, ZNs, and that's really the level you want to watch. Those are very kind of like flip the switch bull bear lines. You want to be very, very careful with action around those levels, and I would really not be trying to fade outside of that. I would be looking at those as bearish below, bullish above. Now, the other thing which I think is extremely interesting, because I know some of you guys are also following, is that, and we've been discussing this a lot, is that we feel that NVIDIA is kind of done for now, and that semis have broken, and we'll have to see what gives now. Now, clearly, the end of the year could make a fool out of this comment, but we'll have to see. So our basic assumption is that NVIDIA is going to play out similar to the last earnings, and here come back into the 200 DMA. And what I would continue to watch, even though people aren't really that interested in NVIDIA now, is watch the 140. That's a key level for the rotation. Now, this could probably be the amber zone, bullish above, bearish below, but I'd be watching these lows very, very carefully. And you can see that, this is mainly NVIDIA, but SMH, you see it tried to break down the other day, and you got a stick save at the 200 DMA. And I think clearly in low liquidity chop, it's very easy to stick save this, but maybe into next year, this is a very, very interesting pattern and something I'd be focusing very, very closely on. And I think the big edge here is on break above, very, very tight asymmetry with a stop below for the break up back into those highs, and preferred outlook here is a break below here, tight stop above this level for a flush all the way back to the bottom end of this range. But if you look at the action in Intel and AMD, they just can't catch a bid. They're very, very, very heavy. The action in some of the other Fangmans is a little bit messy because you've got Microsoft that's trying to come all the way back into the highs. If you look at this, you'd have your base case assumption has to be that it's going to try and come back into those all-time highs in low liquidity chop. That's exactly what Facebook did. But if you look at Amazon, right, it tried to stall, bam. Remember, these daily reversals are not particularly high odds in thin liquidity pre-markets. In a market that's trading good volume, good liquidity in the middle of the year, they tend to be very good reversal signals. But in thin markets, they could be very, very misleading. We had another failure here. I don't know if this is Uncle Warren that's still selling Apple up here, but clearly these kind of dislocations, these kind of markets lead you to believe that there is some kind of a short-term top, short-term blow-off top trying to form in the market. The problem, as always, is the timing, trying to understand when the turn would come or how things could play out, right? So that's really what I would be focused on here, understanding that, again, seasonalities is on the bull side. because of the way we're trading, because of the volume, because of the Luigi coin, the fart coin, all the strange things that are going on, would it kind of be fitting to see some kind of a flush and some people's December get ruined? Maybe, most definitely, but that can't be your base case assumption, right? That base case assumption. Remember, people who are actively trading from here on into the end of the year tend to be people who have to trade, not people who want to trade. Most people who've had a good year, have locked in the year, are just doodling here and there, but you really don't want to try and be making your year or breaking your year in these last couple of trading sessions, because everything's going to be lower odds and everything's going to be a little bit messy. Also, remember, as we go into year-end flow, month-end flow, quarter-end flows, you've got a lot of flows that are price insensitive, just stuff that needs to be done. The price doesn't really matter. Then also there will be people who will be, don't really want to lock in winners to lock in capital gains. People who prefer to sell losers. So stuff that's ripping higher can continue to rip higher. Stuff that's heavy can continue to be heavy. It's just a little bit of a messy time of the year. So my advice would still be to just be very, very tactical if you want to trade, just looking at scalping here and there, looking for opportunities, but really with minimal overnight risk unless you're trailing longs, and just not being too attached to the outcome of any trade, and just stepping back a little bit. It's more interesting to focus on getting your presents, holiday plans, and time with the family organized for the holidays than to try and overtrade, get in trouble, and then ruin your Christmas or your holiday season. Okay, so that's pretty much what I'm looking at. And let's see what gives. Clearly it's going to be interesting, but let's go through some questions that people have posted, and I have a couple of people who sent some in through email. So what to look for? Well, basically, copper. What's happening on copper? Well, you see, we've seen a little bit of a messiness in China, right? Whether you're looking at China, Hang Seng, I mean, some of these moves have been brutal. It really looks like, the hedge fund community, a lot of people are still trying to press these China longs, but they really can't get any traction. I personally have not a lot of interest trading this. But if you go back and you look at copper, what's happening on copper, it's still kind of stuck. I think we've reviewed this in some of the other sessions. And what's happening is you would be surprised to see this completely crumble and die. And there seems to be some kind of strong bid here around the 4,000, but I'm not sure I really want to do anything here. If you see what I mean, you know who. It's kind of like not expensive enough to sell, not cheap enough to buy. And I think it's just going to be smacked around between tariff talk, liquidity, general risk on, risk off sentiment, and tariff talk and China news, stimulus news. So I think it's a very, very hard one to trade. I'm not sure where the interesting trade is, because I really don't like to be short commodities in general, but it seems like, yours is as much as you want sold up here. So I don't know if you have any specific question on copper, but I don't see anything that interesting playing out here. I mean, if you're looking at the metals, most likely what you want to be more focused on here is gold, right? Gold tends to be seasonally strong into the end of the year. Usually we like to look for some kind of a low setting up into the last FOMC of the year to get long and ride that long into January, February, strongest seasonal trend for gold, but for metals in general. But here it seems like this has taken off already, right? So this is, I think, what you would be looking at as gold is any weakness that sets up a nice buying reversal into this lower end of the range into FOMC. This is probably an interesting place to try and look for some tight longs. Equally, remember that as we're sitting here, this is pretty much a weekly R3 on gold. So you'd expect this to kind of stall around this level for the rest of the week. You wouldn't necessarily expect it to particularly accelerate off this area very, very aggressively. Hey, Mike, how's it going? In terms of Euro, so we got the ECB today. It's a little bit of a dog against dog, right? So right now, dollar strong. You'd expect it to probably weaken if it's going to weaken once Trump gets inaugurated. Right here, we had an election trade set up on Euro. We were short on election night for the move back into 105. Full disclosure, I flan up here because I just didn't want to get caught up. So I missed half of the move. But right here, we're back at the bottom end of the range. So for those of you who are familiar and you see our outlook on DXY, the chart I post a lot on DXY, this is just flip it on its head. And essentially, this is the range we've been in for a while. And what it looks like is you're trying to get a little bit of a range breakdown. Okay, so what you want to watch here again with the 10-day moving average and into the ECB, any daily closes, weekly closes below the 105, you'd expect the euro to extend all the way back into parity, right? And that is in line with that 109 move on the DXY. Equally, if we get some kind of bounces here, especially on the ECB, you'd expect 106 to potentially come in very, very quickly. But that's probably the big bull bear line. This is probably an area where shorts are going to try to reload and keep the pressure on. And if we break above 106, then I think there's a good chance that you get a bigger squeeze back into 108, 109 possibly. But I think that it's going to be hard, all things being equal, for this to really get traction. So below the 105, one attracts, and this whole area is likely a sideways area where shorts are going to reload rather than longs pile in. I think longs pile in back above the 106, not before. Okay. And if you're looking at cable, actually, don't we have it? Yeah, if we look at cable here, it's a little bit stronger, but I think that 129 is kind of like that 106 level on euro, right? It's, similar, attempting that breakdown. You've got this, it's all the same chart across the board. You got this move, right? That's trying to hold, but you've got this previous high and all these cluster of moving averages. The 129, which has been a pivotal level for an awfully long time, right? So here, what you want to look at is how does this trade around this zone? And above, clearly, there's a risk of a very, very quick acceleration all the way back into the 131. But this is likely an area where shorts are going to try and reload. I think the trade on euro is far clearer and far easier than the trade on cable, but it's a similar kind of dynamic, right? For MD, Aussie, what's happening on Aussie? Again, look at how clean this move is. Look at how the 10-day, this is, for those of you who don't use it, I'm not a super fan of moving averages, but in terms of a short-term bull bear line, the 10-day moving average tends to work very, very nicely, right? And here, what you want to, what's clear is that every rally is getting sold, right? So very mechanical trading. Now, what's interesting is that we're at this bottom end of the range, right? This keeps on getting stick saved here. And you see that even though it's bouncing, and as you would expect on the first approach, you would expect it to bounce. You wouldn't expect it to go knife through butter. It's getting sold at the 10-day. The problem with getting short here is if you look to the left, right, what's happening is once you break this level, you've got another big support here, another big support here. So the problem here is the shorts become very, very difficult, even though this still looks heavy. And as long as this 10-day keeps on getting sold, your base case is that it's going to try and work its way and flush through all these levels. Now, one way to look at it and one way to trade it is once it breaks through, every little bounce back into the level from below to try and short it with a tight stop above that level for the continuation lower. But it's an extremely messy zone. So I'm not super fan of this chart. However, if we get a catalyst or something, you see how much space is opening up on this pressure back, MD, back all the way into that low. It's kind of like that ball underwater effect. So probably a trade which would be far more interesting for me also, if you look at it in confluence with this previous kind of structure low, is that if we break back above here to look for tight longs with stops below these lows for an acceleration back into this midpoint, right? I'm not sure that's in the cards quite yet, but just to give you an idea, I'd much prefer the short side than the long side if it sets up, than the short side, which seems to be a little bit messier. Does that answer your question? And then you asked for AUD CAD. AUD CAD is just even messier, right? See how it's kind of like trying to keep that pressure on like the Aussie. It's going to be similar to Aussie, except this is really dog against dog because, I mean, yeah, let's not comment on the two economies. But here, what you'd expect, as long as they can hold it below this 200-day, you'd expect it to try and continue to flush back into these lows. If it can stabilize back above this 100-day and the 50-day, then you could see some kind of a move back above here. It'll be interesting to see, I think, once you see what happens next year. The problem here, trading anything CAD related, is that you just don't know what Trump's going to tweet, right? Whether he's going to mention something, whether he's going to make fun of Trudeau again, the governor of the great state of Canada, or if one night he's going to be on the bog and he's going to tweet something about tariffs and you get blown out of your trade. So these are kind of trades that I'd want to stay away from. I don't really want to have overnight risk in these because I think there's an awful lot of risk with Trump tweeting or something like that. So it's really not my preferred. It's not something I'd really want to have too much risk on, especially overnight. Again, I know a lot of people, and again, this is a very unpopular view, but just take it for what it is, for what it's worth. It's just my 2 cents. But remember that globally speaking, it's the same move across the board, right? It's the same move across the board. So what I've always preferred to do is to focus on where I've got more liquidity, where I've got more eyeballs, where I've got better two-sided action. So I always prefer to trade the majors. A lot of people, especially newer traders, get attracted to the crosses because they move quick. But, that means you can get stopped out quick because they give you big moves out of nowhere, but those could be also against you. And, they tend to be charts with a lot of wicks, a lot of stop hunts. It's just very, very messy. So I think ultimately I'd always prefer to express my view through the majors. But again, there's nothing wrong with trading the crosses if that's what you like. There's no right or wrong in trading. Really, everybody needs to find what they prefer to do and express that in line with their own, risk tolerance. But that's pretty much where we are. I think I've answered most of the questions. Talk through some of the ones that came in by email in the initial part. Does anybody have any other comments or any questions or anything they want to look at? Again, I can't stress this enough. You do not want to mess up your year in these final 6-7 trading days. Remember, after we get through the 20th, just because the market is open, it doesn't mean there's good trading. Whatever price prints, it's real, but it doesn't mean it's a really good, easy move to trade, right? So all things being equal, for most people, come the 20th, the year's over and the year's going to start again on the 6th. I mean, think about it. We've had such poor liquidity already so far this year on a lot of days. Imagine what it's going to be through those holidays, right? Again, we've had anemic overnight ranges on the SPOOs. We've had ES through the 9:30 turn, 10 a.m. turn, struggling to hit 200, 300,000 E-minis. It's just not a really good market. And also, for those of you who trade intraday, remember all those intraday setups require all the machines to be turned on, good liquidity, good two-sided action to be able to trade tight. If those conditions aren't there, it's not an ideal. Sorry, I had to sneeze. Not an ideal market for you, right? So that's what I say. Any more questions? In the meantime, again, I'd like to wish everybody a fantastic holiday season. All the best. Have a great time. Enjoy the family. Thank you to all the guys who've been popping up on these or watching the recordings, to all the guys who are liking it, retweeting it. It's always good to see people enjoy the content. And thank you, Knut, so much to you. Great to see you around. And as always, we'll try and do this. Let's be good about it. We'll do this next year too. At least once a month. I'll do a live session here on YouTube. It doesn't matter if one person shows up or two people show up or 100, whatever. We'll still do it. And for those of you who can't attend live, we'll do the recordings. So again, from me to you guys, your families, all the best. Have fun, stay safe, and I hope to see you guys soon. Okay? Good stuff. All the best. Bye-bye, guys. Thanks so much.